Hi, my name is Martin Harris, and I'm an Assistant Branch Manager at Kawartha Credit Union. Part of my role is to provide our members with a better understanding of day-to-day banking, as well as their long-term savings. It is extremely important for our youth to be financially aware and financially literate. What many youth do not realize is the importance of forging a relationship with a financial institution at an early age. There are great and long-term benefits for both parties. For the individual, it could mean better banking rates for a line of credit for a student loan, getting a car loan, or even a mortgage down the road. Through that institution, they'll be able to help you reach your goals, explain the benefits of checking and savings, and find the right products for you. When choosing a financial institution, one of the most important things is finding a location that's right for you. So that could mean, does that institution have many locations in your area? Are there ABMs, so they're automatic banking machines, available and easily accessible for you? Do they have packages for student accounts? So many institutions are putting a focus on starting a relationship with youth at an early age. And that's why you'll see so many institutions offering discounted or free banking to students at a certain age. They realize that as a youth, you may not have much income coming in, if any income at all, and the importance of that savings long term will be diminished if you're paying $12.95 a month in service fees, $15 a month in service fees. So the goal is to help you get to your day-to-day banking without gouging you on those service fees. When it comes to banking, there are many products and services to be aware of. Each product and service has a different advantage and a different benefit for you to help you set up for financial wellness down the road. One of the most important things I tell our members when it comes to banking is to have an understanding of a savings plan and a spending plan. It will give you an actual idea of when your money's coming in and where it's going. If it's coming in and leaving right away, that means you probably already don't have a spending plan, and that's something that you should work towards. It can also help you cut down on poor spending. So the $5 coffee every day adds up very quickly over the fact of a month. But when you actually see it on paper to show how much you're spending at certain places, it can be quite overwhelming. But it also shows that there's ways to cut spending or to spend wisely. It doesn't mean that we need to put all of our money aside right away. So that's where the savings plan comes in. So the savings plan could be you're going to put X amount of dollars away each week into a separate account, or you're going to put 10% of a paycheck or anything like that. It's important to start that at an early age so that we find that we start to really get into that trend of putting funds aside. So how do you know whether to put funds in a checking or a savings account? Well, that's what comes down to basic banking. So a checking account is typically used for your primary spending. That could be writing checks on the account. It could be when you make your purchase at Tim Hortons or when you're at the movie theater or going to the mall. Your savings account should be a completely separate entity. So that's where you're putting those funds to help you reach those goals sooner. So why should we put money in a savings account in the first place, though, is getting that interest as opposed to the checking account. Many checking accounts don't pay interest, and the savings accounts do. So the interest is what the money that the institution gives you for putting the funds in deposit with that institution. As a youth, the idea of earning interest may not be a big deal, but what it means is that when there's compounding interest, so you're earning interest on your interest each month, it means that you're getting closer to your goals and you're not having to put as much in. The other thing to do is to spend wisely. So in terms of the banking ideas, when we use a machine that might not be related to our branch, so with our bank, so if you're banking with Kawartha Credit Union and you're using a CIBC machine, or you're banking with TD and you use an RBC machine, the actual ATM machine will normally charge you a fee. So it could be a nominal fee. At the time, it could be $1.50, but your institution's actually charging you as well. So when we look at that on our spending plan and show $3 every day you're giving it away, it's pretty overwhelming because the funds that you're just simply throwing away could be part of a savings plan. And when we think of savings and spendings, one of the big things that people always say to me is, I just don't have the funds to save. I would if I could, maybe next month. Well, it's never too early to start. And by starting with even X amount of dollars a week, X amount of dollars a paycheck, 10% of your paycheck I normally recommend, putting it into a savings account to help you reach those goals faster. A major question people ask me is how do they choose the right financial institution that's right for them? So it's very important to find an institution that will cater their products and services to youth to help you reach your long-term goals. So some of the questions that you might want to ask yourself when it comes to picking that financial institution is how many locations do they have in the area? Are there automatic banking machines readily available and easily accessible? If you live in the east end of town and the only institution that you deal with is in the west end, well, it doesn't always make sense to deal with that institution. So talk with your parents or your guardians to find out, although they're banking there, is that the right choice for you to bank? So other questions that you might want to ask yourself is, do they have student lines of credit? As we're aging, we're going to want our first credit card, our first MasterCard. Do they have a student MasterCard? Are there service fees on the account for youth or discounted service fees? The other thing that's really important is making sure that they have the right products and services that attract to us. As youth, we are technology savvy, so we want the right mobile apps on our phones. We want internet banking and telephone banking, and we want it readily accessible. So it's extremely important to find an institution that offers those products and services for you and a price point or a monthly service fee point that suits your needs and your lifestyle. So as I was saying, it's never too early to start a spending plan, a savings plan, and financial goals. Never hesitate to talk to your parent, guardian, or financial institution to help you find the right products and services to help you reach those goals sooner. The Canadian government has done their part. So they've really put a focus on educating youth on financial literacy, putting programs in schools such as this to help you practice your financial wellness. But it's also up to you as well to use those resources to your advantage. So set up that spending plan and set up that savings plan so you have a full understanding of what your financial services industry can do for you.